Welcome to WWP Genetics. We're thrilled to have you join us for another engaging and informative video. Today we will be discussing the evolution of cannabis and an in-depth look at Tilray, Canopy Growth Corporation, and Aurora Cannabis Inc. The history of cannabis is a vast and intricate tapestry woven over thousands of years, reflecting its multifaceted role in human civilization. From ancient ritualistic and medicinal uses in Central Asia and the Indian subcontinent to its industrial applications as hemp across Europe and the Americas, cannabis has been a plant of immense utility. Its transition into a vilified substance, largely a 20th century phenomenon, came about through a complex interplay of racialized propaganda, political maneuvering, and international treaties like the 1961 United Nations Single Convention on Narcotic Drugs, which classified it as a dangerous drug alongside heroin. In the United States, the Marijuana Tax Act of 1937 and subsequent laws cemented its illegal status, creating a stigma that would persist for decades. However, beginning in the late 20th century, the tide began to shift. Scientific inquiry started unraveling cannabis's potential therapeutic properties, leading to early medical marijuana legalization efforts in states like California. Over the past 2 decades, a seismic re-evaluation of cannabis has swept across the globe. By 2025, more than 50 countries have embraced various forms of cannabis legalization, whether for medicinal, recreational, or industrial hemp use, signaling a radical departure from the policies of prohibition that once defined the global approach. Cannabis is now increasingly recognized not only for its medical benefits, but also as a significant economic engine, spurring the growth of a legitimate, regulated industry. Within this burgeoning sector, a few key companies have come to symbolize the volatile yet promising nature of cannabis as a commodity, notably Tilray brands, Canopy Growth Corporation, CGC, and Aurora Cannabis Inc., ACB. Each of these entities has played a pivotal role in shaping the cannabis industry's evolution, weathering the sector's intense highs and sobering lows. Tilray Brands, originally founded in Canada, is a multinational pharmaceutical and cannabis company that made history in 2018 by becoming the first cannabis company to conduct an initial public offering, IPO, on a major U.S. stock exchange, the Nasdaq. Tilray's mission has been expansive from the start, positioning itself as a global leader not only in recreational cannabis, but also in medical cannabis research and distribution. Over the years, Tilray has merged with other players, notably Aphria Inc., to create a powerhouse with diversified revenue streams across cannabis, beverages, wellness products, and pharmaceuticals. Its footprint extends across North America, Europe, Australia, and Latin America. Despite Tilray's ambitious expansions, the stock has experienced significant volatility driven by broader sector downturns, persistent regulatory hurdles at the U.S. federal level, and competition from an ever-expanding field of both legal and illicit producers. Nevertheless, Tilray continues to focus on international markets, strategic partnerships, and diversification beyond cannabis flower products into edibles, beverages, and therapeutic goods, with hopes that regulatory progress in the United States and Europe will unlock future growth. Canopy Growth Corporation, often referred to simply as CGC, emerged as one of the earliest darlings of the cannabis investment world. Established in Smith Falls, Ontario, Canopy was one of the first cannabis companies to list on a major stock exchange and quickly attracted major institutional interest, most notably from Constellation Brands, the beverage giant behind Corona beer, which invested billions into the company. This infusion of capital positioned Canopy to pursue aggressive expansion strategies, acquiring brands, securing licenses, and building extensive production facilities. At its peak, Canopy Growth was seen as a bellwether for the entire cannabis industry's potential. However, Canopy's path has been turbulent. The company has faced significant challenges managing its large-scale operations profitably. High overhead costs, international market hurdles, and slower-than-expected U.S. regulatory reforms have pressured its balance sheet, leading to executive shakeups and strategic refocusing. Today, Canopy Growth is working to streamline its operations, focus on premium product lines, and pivot heavily into the U.S. market through the establishment of a U.S.-domiciled holding company, conditional on federal legalization. Despite its recent difficulties, Canopy remains a prominent player, with substantial brand recognition and a significant asset base. Aurora Cannabis Inc., ACB, another Canadian pioneer, has similarly ridden the extreme peaks and valleys of the cannabis market. Aurora initially distinguished itself through rapid, acquisitive growth, snapping up smaller licensed producers and scaling operations aggressively in anticipation of global medical and recreational market expansions. The company focused heavily on building some of the largest and most technologically advanced cannabis production facilities in the world, such as its Aurora Sky facility near the Edmonton International Airport. However, Aurora's aggressive expansion also led to massive capital expenditures, which, combined with slower than anticipated revenue growth and fierce competition, resulted in mounting financial strain. In response, Aurora has undergone multiple rounds of restructuring, shuttering facilities, and focusing on operational efficiency. Aurora today positions itself more conservatively, aiming to serve both the premium and value cannabis markets while emphasizing medical cannabis exports to Europe and other emerging international markets. Although its stock price has fallen dramatically from its all-time highs, Aurora's focus on sustainable growth, a streamlined product lineup, and strategic international ventures underscores its intent to remain a key figure in the global cannabis industry. The broader cannabis market in which Tilray, Canopy Growth, and Aurora operate is still evolving. Challenges persist, including regulatory uncertainty in the United States, particularly regarding federal legalization, banking access, and tax reform. International markets present opportunities but also come with complex compliance environments. Meanwhile, competition from a still thriving black market, especially in mature regions like California, continues to undercut legal market share. Market saturation has led to price compressions, forcing companies to innovate and differentiate or face consolidation and collapse. Yet optimism endures. The cannabis plant's medicinal applications continue to be explored, with research expanding into cannabinoids beyond THC and CBD, such as CBG and CBN. Consumer preferences are maturing, shifting toward branded products, wellness-oriented goods, infused beverages, and other innovative formats. Additionally, technological advances in cultivation, extraction, and genetic development are creating efficiencies and new product categories that promise to drive future growth. The stories of Tilray, Canopy Growth, and Aurora Cannabis are, in many ways, microcosms of the cannabis industry's broader narrative. An initial rush of exuberance followed by a sobering period of recalibration, with a long-term horizon filled with both promise and unpredictability. As cannabis continues its transformation from a stigmatized contraband into a sophisticated, multifaceted commodity, these companies stand at the forefront, navigating an industry whose full potential is only just beginning to unfold. Thank you for tuning in. We hope you found today's video informative. Don't forget to subscribe, like, comment, and share to stay updated on our latest content. For more exciting insights, be sure to check out our brother channel at WWP Logistics. See you in the next video.